Hello and welcome to my take on your Daily 5 for the 4th of June. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. And it is my turn again to host the show today. I'm a senior analyst here at StockCharts.com and the creator of relative rotation graphs. These are the swirly charts in which we can visualize the rotational characteristics of markets. They're often referred to as RRGs. You can find my contributions in the RRG blog on the site, as well as on StockCharts TV, where I host Sector Spotlight every Tuesday from 10:30 to 11 a.m. Eastern. Anything related to sector rotation and relative strength has your interest? Please check out these resources, or even better, subscribe to them so you will get notified when new articles and episodes have been uploaded. The title for this show is 3 Tops and 2 Flops. And as you may have guessed, the reason for that is that I'm going to come up with 3 stocks for which I have a positive outlook and 2 stocks for which I have a negative outlook. And the reason for also adding stocks with a negative outlook is that I think that it is very important, if not more important, to know where you should not be invested rather than knowing where you should be invested. And I want to talk you through the way and the method I found those individual stocks. And I'm going to build on the presentation that I did in this week's episode of Sector Spotlight. As it was the first Tuesday of the month, I always talk about seasonality and about the seasonal patterns that we can expect for the new month. And on the screen, you see a table with the expected or the historical performances for the various sectors. And I have highlighted 3. So financials, 35% of the time outperformed the S&P 500. That means that it underperformed 65% of the time. For technology, it was even worse. Technology underperformed the S&P 500 70% of the time. And healthcare is the positive sector or at least the sector with a positive outlook for the coming month, as it outperformed the S&P 500 70% of the time over the last 20 years. So my stocks I want to pick from those 3 sectors. Now, what can we expect in terms of performance for those 3 sectors? Financials over the last 20 years, on average, underperformed the S&P 500 by 80 basis points, 0.8%. Technology was flat, performed in line with the S&P 500. And healthcare outperformed the S&P 500 by 0.8%, 80 basis points. So out of these 3 sectors, I think the most prominent, the strongest signs are coming from financials and healthcare. Especially when you also plot them on an RRG, you will see that the financial sector is at a negative heading. It's still on the right hand side, but it's losing strength, while healthcare is inside the improving quadrant and picking up relative momentum, so it's on a good streak. Technology is at a negative rotation. It's inside the lagging quadrant for a while already, but the fact that the expected performance is in line with the S&P 500 makes it a little bit more difficult to analyze. My first pick comes from the financial sector, and the RRG here on the left I have highlighted CME. That's my pick in a negative way. I think you should avoid CME. This RRG is plotted against SPY. These are all the financial sector stocks against SPY, and what you can see is a bit of a breadth measure where a lot of the constituents are moving in a southwestern direction, which is a negative RRG heading. So all in all, that sector, all the individual members point to the southwest, which gives us a feel for the overall power of the sector, which in this case is clearly negative, which is in line with the expected seasonal pattern. So if we take CME to the price chart, which is on the right hand side, then you can see that it is already trying to break resistance for about 4 weeks, and it didn't work. It doesn't work. Every time this area around 218 is too heavy. And you know what happens, when it doesn't work, all of a sudden the market market surrenders and we will get a decline. And that's what I expect to see here, that there's just not enough power to break it above that resistance level. That is helped by relative strength, which came up a little bit, but is now facing heavy overhead resistance from this horizontal level here that goes back multiple years, and it's dragging the RRG lines lower. And on top of that, if you just plot a straightforward RSI, you see a negative divergence. My second and my third pick are coming from the technology sector. I told you that that was the least well defined, and you can see on this plot that it is still pretty much spread out even though the benchmark is SPY. So there's a lot of negative, which is to be expected with the weakness of the technology sector as a whole, but there are definitely a few nice blue and green tails to find here. Now, two stocks stood out for me. Now, let me start with the second flop, which is CTSH. It is well inside the lagging quadrant and powering further deeper into negative territory. And if we look at the price chart, then it's almost a perfect double top. We have this very heavy resistance area which was tested, and we're now executing this double top together with a breakdown in relative strength and further weakening of the RRG lines, and here also a very strong negative divergence. So more weakness expected for CTSH. The first positive one comes also from the technology sector, and that's Nvidia, NVDA, powering into the leading quadrant at a very strong RRG heading. And when you look at the chart, then you see that it's actually breaking out to the upside after some sort of a wild swing consolidation. You see a very nice bottom in the making in the relative strength chart, and it's pulling up the RRG line. So the combination of this strong tail and the breakout to new highs make Nvidia a stock to keep an eye on from a positive point of view in the next few weeks. And finally, number 4 and 5 are coming from the healthcare sector. If you look at the RRG here, you see predominantly stocks moving in the northeastern direction at a strong heading inside or towards the leading quadrant. Two stocks that I want to pick out here from a positive perspective. The first one is Agilent Technologies. It rotating back into the leading quadrant after a short stint through weakening, lagging, and back into leading. When you look at the chart here, you see a trend in relative strength, which is pointing upward for almost 2 years now. Went through a little bit of a pause. That's what you see here in the RRG lines, but that's now turning around. Both RRG lines are now back above 100. And the price chart is still well inside the boundaries of the rising channel. So this stock here, Agilent Technologies, has still enough room to power higher into the leading quadrant and outperform SPY and the healthcare sector. The second stock to watch here, I think, is CNC, Centene Corporation. That's still inside the improving quadrant, but rapidly heading towards leading. And when we look at the chart, then you see that it is pushing against a long-standing overhead resistance just below $75 where we broke out of this broad sideways pattern with the upper boundary around 70 a few weeks ago. We're now pushing against 75. If that breaks, then the upside becomes much more and gives a lot of potential. And we're already seeing a turnaround in relative strength where we took out the falling resistance line and we're starting a new series of higher highs and higher lows. And that's pushing the RRG lines higher and CNC into the leading quadrant. And that concludes your Daily 5 for today. Thank you for watching, and I hope to see you again at a future episode of your Daily 5.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.